Good morning, everyone. And once again, thank you for joining us on our latest Advisor webinar series. For those of you that don't know me, my name's Linda Johnston. I head up our investment proposition here at Novia Global. And I'm very delighted to say that today we're being joined by Evelyn Partners. In the hot seat today, we have Rob Clarry. And given the uncertainty of the world that we've been living in with global pandemics, a war between Russia and the Ukraine, the significant disruption of the global and the financial markets, Rob is going to discuss and give us some guiding principles on how we're going to navigate the next decade, which I think you'll all agree should make for a really interesting presentation today. On that, if you have any questions as the presentation goes on, there is a button at the bottom of your screen that says Q&A. Please feel free to submit any questions you have as we go through the slides, and we'll have some time for Q&A at the end. Rob's presentation is going to run to about 25 minutes, and we've got a good 10 minutes or so at the end to do Q&A, so please feel free to submit as many questions as you like. So without further ado, I would love to hand over to Rob for today's presentation. Thanks, everyone.
Great, thanks, Linda, and good morning, everyone. So yeah, as Linda said there, I think it's fair to say that we've had quite a volatile couple of years from a global macro perspective. We had the end of the Trump presidency and the polarization that led to in the United States. We had Brexit here in the UK, and again, the polarization and the politics surrounding that. We had a global pandemic, which hopefully is a once in 100-year event, and the rolling lockdowns and the supply chain disruption that created. And then last year, we had the Russian invasion of Ukraine, the first war in Europe since the first major land war in Europe since the Second World War. And that led to a global energy crisis. So it has been incredibly volatile. Who would have predicted all of these events that took place over the last couple of years? And while all of this has been happening, I think it's been quite easy for investors and market participants to get drawn into the day-to-day market movements and all of the noise and the headlines. But what we're trying to do is take a step back from all of that and think a bit more about what some of these events and other changes in the global economy could mean for the next decade. So in this presentation, I've got three objectives. First, I think it's quite important to look backwards before we look forwards. So I'm going to describe the three drivers of the Great Moderation period. That was a period from 1980 to 2020. Second, I'm going to introduce the four mega trends that we think will be particularly influential in terms of shaping the next decade for markets and the global economy. You can see an initial preview here on the right-hand side of the screen. And then third, I'm going to give you some initial ideas for how you can invest in the next decade in these mega trends. Here's just a quick slide from my compliance team, kindly inserted. I will take that as read and understood. So yeah, coming to the Great Moderation, and this was a pretty good period for the global economy. We had pretty strong global growth as China came into the global economy and boosted global growth. Inflation and interest rates fell. Yes, there were a couple of blips along the way, such as the global financial crisis. But if you consider those 40 years against the last 200, 300, 400 years of data, then it stacks up as a pretty good period for the global economy. And in our view, that was driven by three main factors. So first, we had a period of very favorable demographics. This came via the integration of China into the global economy, workers in Eastern Europe joining the global economy as the Berlin Wall fell, women joining the labour force, and baby boomers joining the labour force as well. And all of these trends were boosted by very favourable demographic data. You can see here on the left-hand side, this looks at the global population. So from 1980 to 2020, there's a 75% increase in the global population. It went from 4.5 billion to almost 8 billion. And effectively, more workers or more people means more workers, means more economic outputs. It's that simple. But not only was there a massive increase in the global population, the composition of the global population also changed. And you can see that here in the chart on the right-hand side. So this looks at the working age population ratio. That's the share of workers as a share of the total population, or the share of people of working age relative to everyone in the population. So you can see that from 1980 to 2020, it started to increase through the first 2 or 3 decades. In particular, this was driven by China, which is the red line. The working age population ratio there went from about 59% to well into the 70s. You can see the world line, which is the orange line. Again, that went from 59 to around 65. So it's a big increase in the ratio of workers relative to the total population. But as you can see over the last decade or so, it looks like that potentially could have peaked, and potentially we could be coming down the other side. The second driver of the Great Moderation period was the movement of workers from rural regions into new cities. And nowhere was this more profound than in China. You can see the example of Shenzhen here, the before and after picture on the left-hand side. So in 1955, Shenzhen was a small fishing village of about 5,000 people. By 1985, this had grown to 175,000 people, so a small town. Then over the last 35 years, it grew to a metropolis of 12.5 million people. So that's a 7,000% increase over the last 35 years. And that didn't just happen in Shenzhen, that happened in a whole host of other cities across China. Sort of 10 to 15 cities, we saw this level of urbanization. That led to the creation of the world's largest sector, the Chinese real estate sector, and that boosted Chinese and global economic growth. But over the last couple of years, urbanization has started to slow in China, and potentially we're coming to the end of this massive movement of workers, particularly in China. There could be some other areas in the global economy where we could see it, but not on the same scale that we've seen over the last 40 years. The third driver of the Great Moderation period was globalization. And this, as you can see in the chart here, this looks at global trade openness, which is a measure of globalization. So you can see that in the first decade, there wasn't really much movement in terms of globalization. But then in 1989, we had the fall of the Berlin Wall. That paved the way for a period of hyper-globalization. Global trade accelerated as those Eastern European economies integrated into the world economy. And as China started to open up its borders to trade. Then in 2001, China joined the World Trade Organization. That led globalization to have another leg up. But then in 2008, we had the global financial crisis. World trade fell by about 10% in 1 year. And as you can see in the years since, it never really resumed its strong upward march. So the economic impact of these trends has been highly significant. China's emergence contributed to lower inflation and interest rates. You can see that in the chart here. Headline inflation in the UK, US, Japan, and Germany. It went from about 8% or 10% in the US to closer to 2%. The chart on the right-hand side, that shows global interest rates. And again, you can see a similar level fall from sort of 10 to 15% to almost 0% by the end of 2020. Global growth, as I said earlier, was also really strong through this period. But as you've probably guessed from the start of this presentation and the intro note that we sent around, we think that the next decade could look very different to those last 4 decades. And we think that we've reached an inflection point, and in particular, we think there's going to be 4 global megatrends that will shape markets over the next 10 years and potentially beyond. So you can see here, this slide basically brings together how we think about these megatrends as well as how they impact macroeconomics and market performance. So at the top horizontal, they're the 4 megatrends. They are the long-term, slowly moving trends that will impact the global economy over 10 years and more. The cyclical trends are the sort of shorter term trends around interest rates and government decisions and policies that influence markets over a 12 to 18 month horizon. Third, those two sets of trends combine to influence the market and macro drivers of growth, inflation, and interest rates. And then those macro drivers combine to influence market performance across different asset classes and different sectors. But coming back to the megatrends at the top, so hopefully you recognize this first one. It's all about demographics. But instead of being a tailwind that's supporting the global economy, we think that demographics are going to be shifting more to a headwind that's holding the global economy back. Secondly, we think that the US-led world order that's been in place since the end of World War II is under threat, particularly from China and Russia. And that's going to have implications for how the global economy works. Third, we think that the war in Ukraine has accelerated the need for the energy transition, but we think the path to get there will be bumpy. And then fourth, we think that we could potentially be on the cusp of a technological revolution. There's a lot of exciting technology in the pipeline, including AI, and this megatrend could potentially offset some of the challenges that we see from the other megatrends. So starting off with demographics first, and this really is about two things. So first of all, the old age dependency ratio is set to increase quite sharply, and you can see that in the chart here. So the old age dependency ratio is the ratio of over 65s relative to the working population. So in 1980, for example, if we look at the UK here, we can see that for every 100 people of working age, there were 25 people over the age of 65. Fast forward to 2027, there's been a slight increase in the UK. You can see actually that Japan, which is the purple bar, is a bit of an outlier. So right now, for every 100 people of working age, there's 50 people in Japan that are over the age of 65. But as you can see, as we go out to 2050, this increases pretty sharply. So in 2050, in the UK, for every 100 people of working age, there's going to be 50 retirees. In Japan, the situation is even more stark. For every 100 people of working age, there's going to be 80 retirees. So that leads to a lot of questions. Firstly, who's going to do the work? Who's going to pay for pensions and healthcare? All of these questions are unanswered at the moment. What's going to be the impact on government debt levels if we have to increase retiree payments? And this is not just limited to the countries in this chart. This is across the global economy. It's getting older. And this is going to cause a massive shift in how the global economy operates in the coming years. But could there be some pockets of opportunities in the countries that are still growing in terms of their demographics? India has quite favorable demographics. It's got a very young population, so it could benefit from this demographic dividend. But also some of the countries in Africa as well, they are still growing in terms of their population numbers. So could these be the opportunities in the years to come? So our second thesis is that the US-led world order is under threat. As I said, this is driven by China and Russia primarily, but this isn't just something that's come because of the Russian invasion of Ukraine. This has been in the making for several years now. And what we're seeing now is that US lawmakers are increasingly taking action to try and counter China. So last year, they passed the CHIPS Act that assigned $52 billion to the domestic semiconductor sector. So what they're trying to do is bring back semiconductor production to the US to ensure that they have that supply chain resiliency. And they're spending a lot of money to try and do that, to reduce the risk that China could potentially invade its East Asian neighbors and potentially Taiwan. This is a massive change in how the global economy works. The second bullet that you can see on the left-hand side is another law that's been passed by US lawmakers. They've placed a ban on all high-value technology exports to China. And this, I really can't state how crucial this is. Over the last 30 or 40 years, China has relied on these technology imports to learn from, to steal their IP. That can't happen anymore. So the US basically gave US citizens an ultimatum that are working in the Chinese technology sector. They said that you've got 24 hours to quit your jobs, otherwise you'll lose your US citizenship. So really, this is all out technology war. Really big change in how the global economy is going to work. And US lawmakers are also looking at a regime to review all US outbound business investment to China and potentially delisting some Chinese equities from US stock markets. But not only is the US trying to decouple from China, you can see in the middle that China also has a plan to increase its own reliance on its own internal markets rather than external markets. But also China has developed a no-limits friendship between President Xi and President Putin. They're increasingly working together, and clearly that's alarming Western policymakers. So not a very positive outlook in terms of geopolitics, but still that does create some opportunities for investors, particularly in those strategic industries that have been brought back on shore to the US and Europe. Semiconductors, so they're the chips that are used in pretty much every technology device, as well as some of the healthcare sectors as well, and vaccine development, etc. But also defense spending is set to accelerate massively through this decade. Japan is doubling its defense budget. The UK and other European economies are massively increasing defense spend given the growing threat of Russia. So there are some opportunities for investors despite this quite negative outlook. So third, our hypothesis here is that the war in Ukraine has accelerated the need for the energy transition, but we think it's going to be a bumpy path to get there, and I'll explain why in a second. But first of all, just thinking about the investment. So the US has passed over $400 billion of investment for the energy transition, as you can see here. This chart just looks at the emissions by each sector, but also where that investment and the incentives is targeted to try and reduce those emissions. So they've thrown a hell of a lot of money at the energy transition. The potentially incoming Labour government has a similar ambitious energy transition plan. The Europeans have passed a very big energy bill as well, but there's going to be some challenges in terms of the transition, and that's really highlighted by this slide here. So this diagram looks at the supply chains of oil and gas and clean energy technologies. You can see in the top half, that's traditional oil and gas dominated by the countries that we all expect, the US, Saudi, Russia, etc. But the problem is captured quite nicely in the bottom half of this diagram. You can see there's one country that really dominates the end-to-end value chain for clean energy technologies, and that's China. So China's been investing in this for a long time. It is significantly ahead of its Western counterparts in terms of the development of these types of technologies, and right the way from the mining, the processing, through to electric vehicle deployment, wind installation. China is very much ahead of its Western counterparts in terms of these developments. So that's a massive challenge. And then another challenge is that if we look at the mining aspect of this diagram, which is on the left-hand side, what we can see is that the mining of these clean or green energy materials quite often concentrated in some potentially unstable regions across the global economy. So, for example, cobalt, 70% of it is made in the Democratic Republic of Congo. There's a civil war in the Congo right now over access to these cobalt mines. And that, in itself presents a massive risk to the energy transition, because you can throw a lot of money at it, but unless you can get these materials out of the ground that are needed for the transition to build the new infrastructure and energy and other parts of the energy transition infrastructure that are needed, unless you can get that out of the ground and deployed quickly, then it's going to be a drag. And we think that that's going to make the transition over the next 10, 15, 20 years quite bumpy. So turning to the fourth mega trend, this is the technological revolution. And technology is probably the wild card here. it's difficult to know exactly how impactful technology will be on the coming decades, but technology has the power to offset some of the negative impacts from those other megatrends. So, for example, if you look at number 10 in the diagram here, the future of clean energy technologies, a lot of technology is needed that we don't already have to try and enable the energy transition. If that comes through quickly, then that potentially could accelerate the energy transition. Looking at number 8, so the bio-revolution, thinking about the impact of aging societies and those changing and shifting demographics, there's going to be more demand for healthcare, and technology can play a critical role there. And then you've got things like number 5 and 6, like artificial intelligence. Number 4, next generation computing. We've all seen ChatGPT and the potential implications across a whole host of other industries that could have. So technology really has the power to, enable progression and potentially mitigate the worst of the impacts from those other megatrends. And I'm sure we've all seen ChatGPT in recent months. There's a lot of excitement about that in markets at the moment. For those that haven't, it's basically a free chatbot that was launched last year. It aims to mimic human conversation, but you can use it to write content, code, program, compose music, and some smart kids have even been using it for their homework as well. But I think it's quite scary that this is only the start. Where's this technology going to be in 5 to 10 years? It's already incredibly powerful, and this could potentially transform the global economy. And that would be quite welcome, because if you look at the chart here on the left-hand side, we can see that UK productivity growth over the last 50 years or so has been in a structural decline. Effectively, what we mean there is output per hour per worker. That's been falling over time. So that has meant that economic growth in the UK has been pretty poor over recent decades. Similar story for some other advanced economies in the world as well. They've struggled with low productivity growth as well. But AI has the potential to offset some of this. So you can see the chart on the right-hand side. That looks at the potential or the estimated impact of AI on annual worker productivity growth. We've got estimates ranging from 6.8% to 1.7%. So that would, even if 1.7% came through, that would be a material increase in productivity. And with that, we'd expect to see stronger economic growth in the global economy. So technology, as I said, has the power to offset some of those other potential negative impacts and really drive the global economy through the upcoming decades. So turning to the final section then, this is about the investment strategy in this environment. We've been through sort of most of this already, but these are just some initial ideas for how you might want to invest in the different trends. So to invest in the shift in demographics, as we said, this is all about higher old age dependency ratios and aging populations. We think that the healthcare sectors are going to benefit from this. It's quite an obvious one, but things like life sciences, biotech, and chronic care. There could also be potentially higher demand for financial services if there's more retirees as well. In terms of number 2, which is the changing world order, we think it's going to be those strategic industries that are bringing back investment and business and industry back on shore, such as the semiconductor sector. But also we're going to see massive increases in defense spending. That's both traditional defense and also things like cybersecurity as well. To invest in the bumpy energy transition, there's a whole host of different dimensions you can think about here, starting from the firms that are mining those green energy materials through to the firms that are actually building the energy infrastructure. So we like clean energy infrastructure, transition materials, and also the renewable producers as well. Then finally, in terms of the technological revolution, we see technology as a key enabler, and the themes that our internal analysts are quite excited about, obviously AI, but also cybersecurity and cloud computing as well. So that's it for the main presentation. If you want to find out more, do check out the research that we've got on our website. That's our team, and that's it from me. So thanks very much for listening, and I will pause there for any further questions.
Thanks so much for that. I'm sure you'll all agree that was extremely interesting and some brilliant points that you raised there. There has been a couple of questions from the floor. We've had a couple of questions along a similar line along the megatrends. So from the 4 megatrends you mentioned, which are you most excited about, or which do you think are most important and impactful for financial markets?
Yeah, good question. So I think I would say that I'm most excited about the technology megatrend. Obviously, that's very much in the news at the moment, but just using AI in our day-to-day work, I can see sort of how powerful it could potentially be. We do a lot of writing and coding, and it's saving a lot of time doing sort of automating more manual tasks. And as I said, once that progresses to the next level in 5 years' time, how powerful is it going to be? It's quite scary and exciting at the same time, I think. So technology is probably the one that could be most exciting. I think in terms of the impact, so just thinking through them one by one, shift in demographics is quite slow moving, but over the next 10 or 20 years, that is going to fundamentally change the global economy. So it's sort of near term, it's maybe a bit less impactful, but longer term a bit more impactful. Climate change is clearly with us now. We're seeing evidence of that already. So I think that presents a massive investment opportunity given the amount of money going into it as well. And then the changing world order. Obviously, we're seeing risks around that at the moment. Here's hoping that some of those risks don't materialize. But I think the implication here is that there's going to be a lot more defence spend, and that's the main opportunity there.
Thank you for that. A couple of other questions as well. Are there specific AI-driven strategies or technologies that investors should consider incorporating into their portfolios?
Yeah, it's a good question. It's something that we've been looking at recently. So we've developed an AI portfolio where we monitor about 20 different stocks that are linked to artificial intelligence, whether that's generative AI or whether it's the semiconductors that are used to enable this advanced computing. So our view at the moment is that there's a lot of money being invested in trying to develop these AI chatbots. And this is effectively the gold rush. All of this money has been investing in it. We don't really know who's going to win, or if indeed what you get out of it is going to be a dominant product and lead to massive revenues for one company. So our preferred way of investing in this theme at the moment is via the semiconductor sector. We know that semiconductors are going to be needed on a massive growth. Demand for semiconductors is going to grow massively through this decade. Semiconductors are used to power AI applications. So we sort of see this as the picks and shovels in the gold rush, if you will. So we know that they're going to be needed. They're strategic sectors. There's a lot of investment going in there. So that's the best play in our eyes.
Okay, thank you for that. We've got 2 more questions. And if you're an Apple user like myself, during your presentation, your phone pings with Apple notifications, and one of them was with regards to inflation, that it's stuck at 8%. And so with inflation currently so high, what do you think will be the impact of the megatrends on inflation?
It's a good question. So I think each megatrend will have a different impact, really. So if we take technology, for example, over history, we've seen that technology reduces inflation because it enables countries and companies to build products and services at lower cost effectively. So technology can be deflationary. The changing world order is potentially inflationary, particularly if we see an active war. We saw that last year with the Russian invasion of Ukraine. Energy prices spiked. That led to inflation. So that one is probably more inflationary. Also, if we think about some of the companies that are bringing supply chains back from East Asia to the US, well, that's more expensive to hire workers, etc. So that's another inflationary element of that. The energy transition is probably inflationary as well. There's a lot of investment going into it. new or clean energy is more expensive at the moment than hydrocarbons. So near term, that could potentially be inflationary as well. But then on the flip side, if you think about shifting demographics, retirees tend to spend less and consume less than people of sort of working age. They tend to save more money. More savings tends to reduce inflation and interest rates. So there's sort of a counterbalance going on. But overall, we think that through the next decade, there's more upward pressures than there has been in recent decades, primarily from the energy transition.
Excellent, thank you so much. And just a final question. I'm putting you on the spot slightly here. Implementing these ideas that you discussed throughout today into your portfolios?
Yeah, so there's a couple of ways. So within our investment framework and the way that we invest, we have equity analysts that cover all the different sectors, and they obviously try and pick their favorite stocks within those sectors. But we're basically looking for companies that are being supported by the mega trends and that are benefiting from the tailwinds behind these trends, and trying to avoid the companies that face headwinds essentially at a high level. That's what we're trying to do. So we're trying to incorporate that into our investment process and pick those companies that we think can be winners. Then that's sort of the shorter term investment around a shorter term investment horizon. Over the long term, we're looking at the impact of these mega trends on strategic asset allocation, which is our 10-year view in terms of what we think the returns will be to different asset classes, different regions, etc. So there's a number of different ways that we're trying to incorporate this at the moment.
Thank you so much, and I'm sure everyone will agree it was really, really interesting. Some excellent slides in there, lots to take away, and we will be sending the slides out to everyone afterwards, so you'll be able to get a copy of that. And we also have a recording of this, so everyone that registered will have a recording of this presentation to listen back on. But it just leaves me to say thank you so much, Rob. It was really, really interesting. Really appreciate your time. Thank you everyone who submitted questions as well. Some brilliant questions there at the end, just to get a little bit more detail into Rob's presentation. So that was super. Our next webinar will be on the 21st of July, and details of that will follow in our Pulse newsletter, which is out in a week or two. But thank you so much, everyone, and we look forward to welcome you all to our next one in July. Thanks again, Rob, and thanks everyone for dialing in.
Thanks for having me.
Thanks very much. Thanks. Bye.